Hello, traders. It's about 8 a.m. It's 7:59 a.m. Chicago time on Wednesday, the 17th of July, 2019. This is episode number 1557. A reminder that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have a market that is trading in a mixed stance. The Euro stocks and the cable are unchanged. The Dow, S&P, and the Russell are just below their settlement prices. The S&P down only point, so 0.03%. The Russell down 2.1 points or 0.13%. Gold is off, still trading above 1400 though. Gold's holding at 1,407 and 70 cents, down 24 basis points. Crude oil stronger, but I don't know if I talked about it here at Convergent, but I talked about crude basically putting in a topping pattern a couple of days ago and testing what was support and then holding below $60 uh, the the um, despite the large draw reported last week of 9 million plus barrels falling below 60, uh, tells me that it's overbought potentially. And I have to say, in crude, the structures have been really interesting, very, in my opinion, very clean support resistance, price action based trading in there on the day trading time frame. The Bund is relatively strong today. It's trading at 172.95. Yeah, it was up 63 cents and trading up 0.37%. The bonds are up 17 ticks. The treasuries are up 7 big ticks. The NASDAQ is holding on to gains from yesterday's settlement, up 4 points. So as you can tell, it's really a mixed bag this morning. Again, the S&P trading against yesterday's settlement, basically. In terms of what's ahead in the calendar, we got a lot of releases this morning. The Great Britain inflation rate came in line, and there was PPI, core inflation, construction output out of the eurozone, core inflation and inflation out of the eurozone, inflation out of Canada. And in the U.S., we got the housing starts, which was a lot worse. Housing starts month on month came in negative 0.9, expected positive 1.9, so a swing down of 2.8% versus consensus. Building permits down 6.1%, expected a positive 0.1% there, prior 0.3. Pretty bad there for the month of June. Housing starts came in a little bit lower, not too much, and building permits for June came in at 1.22 million versus 1.3 million expected. We are expecting crude oil at 9:30 Central, 10:30 Eastern, and then Japan's balance of trade. That's a key figure for them at 6:50 p.m. Central, 7:50 Eastern. That's what's on deck. We have the EU-Canada Summit and the G7 financial ministers and central bank governors meeting today in France. Let's move on to our review segment. So the primary scenario yesterday was bearish, if you recall, and I explained the reason why, the excess high, and a couple other factors. And the idea was the market's likely to test higher, so you follow this green primary scenario. That is the main idea of the day, or the main trade of the day, as planned. Expected a push up, an impulse down, consolidate, and then I expected us to drop below. And if you recall, the target for this scenario was 30.10 yesterday. 30.10. The extended target brings us to about 30.06 below. Here's what actually happened. Pretty sweet, right? So we have an open auction. We test up. Cool. We have a nice expansion down. We hit that 30.10, which was up here. hit that 3010, consolidate for just a second, and then we end up pushing to 3005, 3006, and putting in a double bottom at 3004 and a half week low by any measure before we rotate back to mid VWAP and the prior low, giving us a small opportunity there, a higher risk opportunity given the action below it, but still an opportunity to get short. And then we hit a double bottom, which was not expected. We've had 3 days with double TPO lows in the past week or so. It's very, very unusual. Seems like we're having weak lows. We're not making excess lows as we have been for the last few months. And so to me, that's a sign of weakness. The expectation yesterday afternoon, I did this weekly trade talk at Convergent, which finished around here. The expectation is we're likely to test the high volume node down and finish somewhere in the low volume node that was put in this day. And instead, it finished even weaker with the point of control shifting down from here to here. So now we've got a point of control on a day-to-day basis that has moved lower. We're accepting value lower, lower high, lower low. The question now becomes, is this the beginning of one-time framing down? If it is, 2980 is the big target below. There's a big gap zone down there. And that's where we're likely headed if we continue to roll over. So let's see. So 2987 is the big area to test below. It's the kind of vacuum area that's immediately below. And as we start to curl over, it's important to put up a composite, a micro composite here to see what things look like. So we're moving away from the upper distribution right here of volume. We fell through the low volume node, which is marked at 3012 or so. We're in the secondary distribution. You can see there's no balance. This has been kind of trending up with no balance. So there's a lot of room to really shift around to the downside. And if we push below the 3000, then I would move to begin to incorporate the prior balance area right here to start seeing what are the areas of acceptance and rejection. Rejection being shown here with these low volume nodes. These are low volume nodes wherever there's very little volume. It's kind of hard to see, isn't it? Let's switch this over into a shaded. Let's make it purple for you. So you could see that there was very little volume there, relatively little, really a key low volume node down here. That's the gap zone. That would be the target to the downside. And the question is, if you flip this on its side, if you roll this over this way and laid it flat, it would look like peaks and valleys, and something like that, right? And it's the market generally kind of hangs out up here, high volume nodes, and once it tips over, it moves into the low volume node, kind of hangs out there, and if it rejects that, it comes back, hangs out at the high volume node. But if it accepts the next area, then you're looking for the next low volume node. If it accepts the next area, then you're looking for the next low volume node, and so on. And that's basically how I use profiling. It's like how good of an effort is each side making, and which side is actually gaining traction. So that's the review of yesterday. Scenario 1 played out pretty well. It extended below by about 5 points beyond my target of 3010. I was being very conservative, which is nice to see. But the fact is, despite the rallies, I was looking for a rotation down, a market to roll over, and it did with some pretty decent opportunities yesterday. Sideways open on the overnight, a little test of that double bottom. This is again a bona fide double bottom at the low, very low probability of hanging around. I expect this to be breached today and into 3,000. And then the market kind of pushed higher throughout the overnight session until the inflation numbers are out of the eurozone before it started to roll over. Okay, so overall, the profile overnight has the same. The volume overnight is about the same as it was yesterday, 147,000, which is pretty normal. The profile itself is not saying too much to us. Yeah, you know, the prior sessions, extended hours, I talked about how a normal distribution looks something like this, and a high kurtosis distribution looks something like that. And that's what we had yesterday. We had this very high kurtosis or very concentrated distribution of values, and it's likely to that's a lot of really tight balance. It's likely to lead to imbalance, and there's your imbalance right here. So that energy likely dissipated. More energy was being built here, and it looks like it just tested a wide range in the overnight session. So it's not giving us much of a clue other than the fact that we are at the overnight point of control. We are below mid, below VWAP, and below this quick double top that it put in, you know, missed by a tick. We're below this almost line in the sand right here in the overnight session. We're below that. It looks like it's likely to continue to roll over. Um, with that, I'm going to give you a quick look at CT Bookmap. Again, you can always get this at ctbookmap.pro. I think there's a 14-day trial on it, risk-free trial. Uh, the 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 session has been relatively normal so far, but the delta continues to just point downwards in the overnight session despite the climb. And this is the delta since yesterday, so don't freak out there. And it has not tested any significant liquidity at all, which I'm finding pretty odd. Like we did not we're not colliding with anything through the entire session. The liquidity is concentrated up here at 23, at 15. And then at below, it's concentrated at 3,000 as we would expect it to be, 98 and 96. Those are the areas that are holding a lot of liquidity. And why do I care about those versus this noise that's in here? I care about these because they've been here, and that's the beauty of CT Bookmap. Is that I can see how long these guys have been here, and I have full depth here, so I can scroll out as far as the eye can see to see where the liquidity is. The depth goes on and on. There are probably 100 levels here. So I can see what's been working in the book, and we're tracking it using this software. Those of you who might like color, there it is. You can see the areas that have been in play for some time that are turning red, meaning a lot of volume concentration. And that's important to see for those who are into order flow. It's not for everybody. So let's switch gears and look at what we're expecting for today. Before I do that, I want to make sure I'll let you know that tomorrow I'm holding an open AMA. The link is right in front of you, and it'll be in the chat box. It's also on the Convergent Trader Byte page. It's also in the description of this YouTube video. So if you go to the description in the YouTube video, you'll find the link there. And in that page, you'll have the ability to register. You should register even though you're not going to attend live, and that way you can be sent the video. We don't spam anybody. Just make sure you register, and on that same page you'll find the ability to a form that gives you the ability to submit your question ahead of time. So if there's anything you are curious about or wanted to ask relating to trading, feel free to do so, and I'll answer it to the best of my abilities. What are we expecting for today? Now remember, we're kind of rolling over here a little bit, and the overnight session is showing a little to the upside, a little effort to the upside. It was not the overnight high was essentially in line with the low of Monday and the low volume node of yesterday right here. So this is a big area, big fight area. If the market takes this out this morning after the open, then I'm going to lay off the shorts. The open is expected in range, in value, even though it's a double distribution profile. I'm expecting an open auction that's likely to dip almost immediately down into the prior, into the below the prior low and push into 3,000. I'm expecting turbulence at 3,000. I'm expecting it to dip below 3,000 into 29.96, 29.98. Remember, there's liquidity there, both at three prices, 3,000, 98, and 96. So I'm expecting this to probably hold on a first try, come back to 3,000, and then just sit sideways for the rest of the session. But I am expecting a lower low and more control by sellers this morning. Okay. Secondary, we open, we dip down, we get an impulse up back into the point of control, and we start to drift up into this 2013 area, consolidate for a little bit, make a test higher, come back and finish sideways in range. So we do get a lower high, lower low, but we finish relatively strong, potentially setting us up for 4 days of balance, 4 days of balance to bring us into the next leg. Those are the two main scenarios. There are others, open test drive down, open test drive up, and so on and so forth. But that's what I'm looking at for today. Okay. Hopefully this was useful to you. Don't forget to sign up. The link is in the chat box in front of you on YouTube. Don't forget to sign up, and I'll catch you there tomorrow. If not, I'll catch you tomorrow morning. Take care.